Right, but we're just going to quickly toss into our fundamental guest for the show, Amit Jeswani, who is the CMT founder and CIO for Stallion Asset. Amit, good morning. How are you doing? I'm going to start off by asking about your assessment overall on the markets, especially after we're done with the Q3 earnings, and we're seeing some amount of lackluster trend coming in on Nifty for the last 3 consecutive sessions. What do you make out of it?
Hi, Nikki. Good morning. Thank you for inviting me. You were the first one to do my interview 6 years back.
Pleasure.
I started television this thing with you. So thank you so much for having me on your show. I love where you've reached.
Thank you so much. That's a pleasure talking to you. But let's start with what Nifty has. What direction do you think market is inching towards? And also any kind of, the trend has remained lackluster for the last 3 consecutive sessions. But what do you make out of the earnings per se?
So there are 3 things which have happened, Nikki. First, on the global side, the Fed rate, people thought that the Fed is about to pivot and everyone was bidding the markets up. Now in the US, Neil Karkarshi, who's the Fed, one of the members of the Fed, has said that, we'll have to probably hike rates by 50 bips. Goldman Sachs came out with a report saying that we'll have to hike rates by 200 bips. So now, again, the whole thing starts again that the pivot has not happened. But we strongly feel that inflation, so the PPI numbers this month, the expectation was 5.4% in the US. It came at 6%, and that is how the entire debate started. We believe the NASDAQ has bottomed. The NASDAQ is still 10% above the lows. The NASDAQ has bottomed. And this was the last phase of selling of NASDAQ. So that is the first view. The second thing, interest rates in India have gone higher, and we also have somewhat a corporate governance crisis. With interest rates going higher, typically what we see is that the small caps keep coming down. We've seen times of 2015-16, we've seen times of 2018. The markets will get very, very, very narrow, Nikki, from here. So,
all right, Amit, I'm just going to have a conversation. Amit, thank you so much for your patience. I'm going to start, let's resume back to the conversation that we were having, that probably you expect Nifty to now remain in a tight range, and the sectors that have surprised you with their earnings in Q3.
So, Nikki, coming back, the markets are going to be, the Nifty is going to be narrow, but the breadth has broken down. A lot of stocks are falling. More than 50% out of the 1,700 stocks on Nifty, more than 50% stocks are down more than 50% from the 52-week high. So the market's breadth has become weak, and it will become weaker, I believe, in the first half of 2018. But over long term, we need to bet on companies who are market leaders, gaining market share. Nikki, HDFC Bank in 2012 was a 4,000 crore profit company. Today it's at 45,000 crore profit. That's the expected profit for FY23. Bajaj Finance went from 400 crores of profit to 10,000 crores of profit in last 1 decade. Polycab went from 89 crores of profits to 1,100 crores of profits. What we are ideally looking out for is companies who can scale up and become very, very large, dominant in size in their respective sectors. So coming to your question of what do we see this quarter? This quarter, Nikki, has been a horrible quarter. If there were 10 companies in every sector, 8 companies have come out with very, very, very bad numbers, from retail to chemicals. If there are about 40 listed companies in chemicals, I would say 35 have come out with bad numbers in retail. And chemical was a very popular sector for China plus one kind of sector. The numbers are very, very big, except for the fluorochemical names like Navin Fluorine, SRF, and Gujarat Fluoro. Same is with the retail. The discretionary spending has fallen a cliff. And, Alan Greenspan would track this data called the underwear index. He would see the sales of underwears to gauge the economy. The sales of Rupa are down 50% this quarter. Lux is down 31%, and dollar is down about 25-27%. Page Industries up 1%. Tells you the economy is a little weak. The economy, the discretionary spending was a little weak this quarter. Yes, so that has been broadly this quarter. But on the other side, now there are companies like Trent, which came with 61% growth. Look at Shoppers Stop. The growth was 12%. Manyavar reported a -8% SSG growth. So, basically what I'm trying to say is that in every sector, 10 companies, out of 10 companies, 8 companies are poor. You have to focus on those 2 companies who are delivering numbers. The growth is there because this market is going to be a 40, 50, 60 stock market. Not hundreds of stocks will make a new high. There are only times like 2021 where 500 stocks, times like 2017, times like 2013-14, times like 2010, times like 2007, times like 2003-4, where 500 stocks, 700 stocks are making new highs and everyone makes money. The market mostly almost always, except for these once in 4-year kind of period, gets very narrow. Money making gets difficult. But if you are in those 50, 60 names, sometimes they are called Ritik in 2018. Now there will be a new term at the end of this year. There'll be a new term called for these narrow stocks. But these stocks will be high growth. They'll be reasonably valued. Good management. You cannot take corporate governance risk at this stage of the cycle. And in small caps also, you have to be a little more cautious than what you were last year. So
Sure.
that is my broad market view across sectors. There is no one sector which I can see. Like last year, you had PSUs doing well. I believe PSU banks have topped out. If you think railways, I think mediocre. If you look at defense, I think there is still steam to go there. So even in the last year trends, one will continue, the 2, I think it's over. So that is my way of looking at the stocks. But we are looking at hyperscalers, the ones who can scale up and make it very large. The surprise this quarter, the second question that you asked me, the surprise this quarter, Nikki, has for us been consumer tech. We have bought 2 fintech names. Of course, we have our risk management systems. We hopefully won't lose too much money, but there is clear road to profitability in these 2 fintech companies. And I believe, and they have cash on books. The valuations are very cheap. Everyone hates it. They are near profit, I would say, or profitable, ex ESOP cost. So these are places where we have made very decent size bets this quarter, and we are also betting on one demerger. So these are the only changes that we have made in the portfolio. Also, yes, so Nikki, I would give it back to you.
All right, Amit, you said 2 fintech companies, and apart from that, you also spoke about one company that you guys have kept in radar because of the demerger issue. Could you highlight all the 3 names that you were talking about in detail?
See, names is a little difficult because my compliance team gets a little upset if I tell you what I'm buying. But
Sure.
I can tell you the 2 fintechs are very simple to know.
But just a broad flavor, if you can talk about. Go ahead.
Yeah, one is an insurance tech player. The insurance tech player is 1%. So India's total savings, Nikki, is 50 lakh crores. Out of that 50 lakh crores, 9 lakh crore goes towards insurance, 7 lakh crores towards life insurance, 2 lakh crores towards general insurance, 1.5 lakh crore goes towards SIP, 20 lakh crore goes towards bank deposits, 4 lakh crore goes towards loans. So today what we are playing with this insure tech player is the 9 lakh crore profit, 9 lakh crore premiums that Indians pay every year. The company that I'm speaking about is 1% of India's insurance market share. Yet on the online marketplace, it is 94%. Basically on the online market, it is 94%, 93% market share. It is expected. Now think about it. There's a red ocean out there. HDFC Life, SBI Life, LIC. There are about 24 life insurance companies, 33 general insurance companies, and 5 health insurance companies who are fighting against each other. That I'll give you better, lower price, I'll give you higher coverage, etc., etc. Now there is one player who's growing 5 times faster than the entire, 4 or 5 times faster than the entire industry. So it becomes a better bet for me because I've got higher growth. And
sure, Amit, I'm just hold on to your thought for a little bit before, because of the compliance issue, you probably cannot get into the stock names and it'll be difficult for us to kind of figure out the stock that, we're trying to make a broad comparison with. But the point is well taken on board. Let's also discuss the chemical stocks because the market's love affair with the chemical stocks appears to have dimmed, considerably of late. If not, how does the valuation of this space look right now?
So the valuation of the chemical space, it depends on what stock you're buying. So the fluorochemical companies, like the three fluorochemical companies, there are only three fluorochemical companies. It's not very difficult to understand which ones. That the game is on. The rest, see, the same thing happened in pharma also, right? You had very high prices. Pharma prices moved, API prices moved higher. The margins of, let's say, a DVs moved from 30%, 35%, and from that range to 40%. So you had higher prices, higher margins, and highest valuation. Now the complete opposite is happening. The prices of APIs have fallen, the margins have come down, and now the valuations are coming down. That happened in Gland, that happened in DVs, those kind of names in the pharma pack. The same thing is now happening in the chemical game. The game is simple. The prices have fallen. All these chemical companies, which used to make 10, 15% margins, started making 30%, 35% margins, right? And now, and the markets bid it higher because the ROE, ROC, everything changed for these names. And people thought it's a China plus one kind of trade. That trade, Nikki, is over. And for next 1 year, these stocks will not perform except the three fluorochemical players. That is still okay. They are the ones who are doing better. But out of 40 chemical names, 35 I wouldn't touch. The 5 ones are like Neogen is there, one other player in lithium chemicals. That all that is different, but except the 5 players, you have to be very, very, very stock selective, Nikki, or else money will get lost in this kind of market. You have to manage your risk very, very, very well. This is what I strongly believe.
Yeah, that's also the sense that we're getting from all our experts. You know, this year probably is not going to be a year for overall broad participation, but few names, hand-picked names are expected to do well. But let's actually shift our focus on the consultation paper that the SEBI has floated to amend the norms for strengthening in the corporate governance at listed entities by, empowering the shareholders. Now, this move comes against the backdrop of Adani Group saga, right? And Amit, you'll also agree with me that Paytm and Nykaa, they've also raised some red flags for the shareholder community per se. What do you make out of it?
So I've not seen that paper, Nikki, to be honest, but overall, yes, there are some issues. What Sanjeev Bikhchandani also on Moneycontrol, I read the same thing yesterday, said that time has come that all these startups increase their governance level. When Sanjeev Bikhchandani says something, time has come, all these startups up the game. What has happened with Sequoia in Go Mechanic, Bharat Pay, it troubles the entire startup ecosystem. And the startup ecosystem is very important for our economy as we go from $3 trillion to $6 trillion. A large part of our profit pool domination will be these startups in the next 10 years. So, and I believe 500 consumer tech companies will get listed over the next 10 years. So corporate governance frameworks, not just in the listed market, but also the funded startups is very, very, very important at this point.
Amit, you also spoke about themes that were catching up with the corporate, or rather were in the fire for the corporate governance issue. Would you also like to take us through that?
Which one? Sorry. So, like example. So, see, corporate governance in India is cyclical. Okay, there are years like 2018. For anyone who remembers 2018, we started 2018 January with companies like Vakrangi and PC Jeweler, who invested in Vakrangi, and both collapsed 90% plus. Then you had this is 2018. I'm speaking about the January started with Vakrangi and PC Jeweler going down. Then in May, you had stocks like Manpasand falling down 90%. You had Dilip Bilkon falling down, Edgy Infra, all these infra names peaked out. Then October came, and by October, you had by September, you had ILFS defaulting. Because of that, DHFL went through a crisis. Yes Bank went through a crisis. Other housing finance companies like India Bulls, Piramil, Edelweiss saw their yields going to the moon. So it is basically when one large corporate governance event happens, okay, for the next 6, 8, 9 months, it is very important in India to be very, very cautious and do not take corporate governance risk. Because last year, everyone, think about it. Last year, there was a war. The Fed increased interest rates 4 times by 75 bips, 2 times by 50 bips, and 1 time by 25 bips. And what did market do? The market was bidding B2G companies. The market was bidding and utility group to the moon. So the market, instead of being risk off, the Nasdaq was down 40%. Instead of the markets being risk off, the market was on hyper risk on mode. So that you have to be very careful right now. For next 1 year, be very careful on corporate governance. Just one risk you can't take this year, that is corporate governance risk. There are 4 kinds of risk: business risk, industry risk, management risk, valuation risk. The valuation risk peaked out in October 2021. Anyone who took valuation risk, including us, had a tough time, and my portfolio went down 10%. I'll just give you, very frankly, now we are still 7-8% away from lifetime highs. So we took valuation risk. We peaked out in October 2021. Now, I think 2023 has started the risk of the corporate governance risk, the management risk, whoever is taken, they will have a bigger beating. This is what I think.
All right, Amit, we'll leave it at that. Thank you so much for taking out the time and speaking to us this morning.
Thank you, Nikki. Thank you so much. Bye-bye.
All right. Well, with this, it's a wrap. Thank you so much for watching. Please do post your feedback for us in the comment section below and follow us on the link at the bottom of your screen. For the rest of the updates, stay tuned to moneycontrol.com and Moneycontrol app.